Bursa Malaysia Derivatives Berhad is a wholly owned subsidiary of Bursa Malaysia Berhad. At Bursa Malaysia Derivatives, we provide a wide range of derivatives products tradable globally via the CME Globex trading platform. Among our equity and financial derivatives, we offer the FKLI, which enables traders to gain leveraged exposure to the local equity market. Of all our products, we are best known globally for our crude palm oil futures. Our FCPO has maintained its position as the global price benchmark and reference point for the international oil and fats industry for over 40 years. As pioneers of palm oil futures and options in Malaysia's earliest commodities exchange platforms, we have for decades developed an in-depth understanding of the value of our palm complex offerings in every respect. Every detail along the supply chain, from cultivation to trading to hedging, no one knows the palm complex like we do. This is where Bursa Malaysia Derivatives offers unparalleled expertise. Our comprehensive array of products, partnerships and platforms connect Bursa Malaysia Derivatives to traders and investors all over the world. Find out more by contacting one of our licensed futures brokers or visit www.bursamalaysia.com.
We would like to wish everyone a very good morning and warm welcome to our listing gallery located in Bukit Kewangan, aka Exchange Square. Welcome to today's prize presentation ceremony for the Derivatives Virtual Trading Challenge 2022.
I would say that the competition is actually one of the best that we participated, and I hope there will be a lot of competitions organized by Bursa to educate a lot of young students or young people about the investing and also trading.
In this virtual challenge, the fundamentals is easy. Buy low, sell high, buy low, And I would encourage people to join DVTC if you are, new in this trading, and you want to explore and, to test out. I think this is a good platform to start off with.
So the key takeaways from this challenge is that I gained more confidence in trading. Definitely there's a lot of mistakes made, but I generally will know what will happen in the real market.
So our winning strategy is from the technical analysis we did earlier. So we usually make decisions based on the trends and everything.
With that, let us commence with the highlight of the day. Our prize giving ceremony will start. Can I please have Dato Omar to the stage once again to present the prizes?
Maybe one takeaway, for myself, I would like to share with the people outside, discipline is key. If you want to make it, you need to make certain decisions which are bold. So if you are sure about the position that you are taking, just go for it.
We strongly encourage you to join this year's challenge to help you to gain confidence in future trading and also learn how to trade and earn profit consistently.
Hello everybody! Welcome to this webinar brought to you by Bursa Malaysia Derivative in partnership with RHB Investment Bank today. So our webinar today, held in conjunction with the Derivative Virtual Trading Challenge, is titled How to Start Day Trading Futures Like a Professional. So welcome everybody to this webinar. My name is Shane Chu. I'm the moderator for this session. So today we'll have both very charismatic gentlemen who join us in this webinar today. And how many of you here really have a strong interest to become a day trader? Okay, you may put out your hands, or you may click raise the hand function. Okay, let us know. Okay, click the raise the hand function is really have a keen interest to become a day trader. Okay, put out your hands. Okay, now A lot of my peers who have become a day traders, who have become professional prop traders, they choose to trade futures. Futures give them the flexibility to long and short the market at ease, giving them a recession-proof income. So today we're gonna explore how day trading futures work. If you want to become day traders, all right. So before we begin, as usual, disclaimer. Whatever we share in this webinar is only for educational purpose. In no way that I give any recommendation for you to buy or sell any listed securities or derivative that we mentioned here. If you decide to make any investment decisions, you're 100% responsible for all your investment risk. Now, allow me to introduce our speaker today. He holds the position of Managing Director at Top Infinity Sdn Bhd, a proprietary trading firm that focuses on trading a range of financial markets, including global commodities, currencies, equity indices, and financial derivatives. Along with this, he serves as the managing partner of Exmodius Trading Group PLT, a consultancy firm that offers bespoke trading strategies and coaching services to both individual and corporate clients in the equity and commodity derivative markets. He has 25 years of experience in Malaysia's listed derivative industry. Before starting his own consultancy, he held leadership positions in futures brokering divisions of major investment banks in Malaysia. He served as the president of the Malaysian Futures Brokers Association between 2018 and 2019. And he's none other than Mr. David Loh. So David, good to have you here today in our session.
Thank you, Shane. Fantastic to be here.
All right, so we'll begin the session. Let me hand over the session to you.
Okay, thank you, Shane, for the wonderful introduction. Just let me now share my screen. And this evening, we are going to see how to start day trading futures like a professional, okay? Day trading is something in our prop trading, we do it every day. That's our everyday thing to do, okay? So we'd like to, of course, today share with you some ideas, some key concepts, okay? For those of you who like to know about how to day trade, and those of you who may be doing other like swing trading or position trading, okay? How to get into day trading, okay? So it's a very, what do you call that? Very interesting field and very, very intense way of trading, okay? So let me today share with you some of the concepts and what you need to know about day trading, very important concepts. I'm also going to share with you setups, okay, how to do, learn maybe a new technique for you, okay, very simple setup that I use myself, okay, and also the mindsets, the very important mindsets to be a day trader, okay, so let's move on. Disclaimer, Shane has covered that, so I won't be doing that, okay? So you see here, of course, in Top Infinity, we do day trading every single day. That's what we do on a day-to-day basis, okay? And this is what we're going to cover this evening. 5 critical concepts about day trading that you must know, okay? Very important things you must know before you get started on day trading. And then we'll share with you a simple day trading strategy, okay? You can set up so you can actually use starting even today or tomorrow, okay? Of course, you need to learn it and master it, okay? And also talk about 8 mindset keys to success as a day trader, okay? So day trading, not only about the techniques, okay, but the concepts in terms of your mindset is very, very important, right? So let's move on. Okay, the lure of day trading. If you're going to Google, okay, you can try it afterwards or on your phone. If you type day trading in Google, okay, in less than 1 second, you get 1.2 billion results, okay? So see how hot this particular topic is, day trading, okay? And this, of course, has been very, very popular. In fact, in the last couple of days, I mean, last couple of years. And that's because everybody got locked down because of COVID-19, and one of the things they could actually do, okay, online trading is day trading. A lot of people got into it. A lot of young people got into it, okay? So that's one thing why day trading is so popular. But second thing is this, because there's a lot of volatility in the markets these days, right? If you talk about even Bursa Malaysia markets like the palm oil contract, it's very, very volatile, and means that on its daily volatility by itself, it provides a lot of opportunities to take advantage of those trends in the day trading range, okay? So the futures markets around the world, including Malaysia, Bursa Malaysia derivatives, has a lot of nice moves on a daily basis. Okay, so those are the opportunities that day traders actually are able to gain advantage of. Of course, over the last couple of years, because of technology, you have a wide ability of market data. A lot of trading platforms now are very affordable, right? Some of these platforms, a lot of you who trade know platforms like TradingView, which is one of the favorite tools that the traders use these days because they're affordable. Okay, I don't own shares in TradingView, but it's a platform I use myself. Okay, and a lot of other online platforms like barcharts.com, etc. Right? So the availability of platforms make it a very, very popular avenue for people to look at trading. Okay, and of course, accessibility of global markets around the clock. Even Bursa Malaysia these days trades at night. Okay, so wonderful opportunities for all to actually trade or even day trade. Right, so that's the lure. But the thing is, of course, there's a lot of hype, if you go and just Google day trading, then next moment you see, hey, how come all your side panels, all of these ads will come up, how to set your ball and trade full time, millions of dollars can be made investing a few hours a day, day trading, insider secrets. A lot of people claim they have insider secrets to make it big in trading, and basically says that anybody can become a day trader. Is that really true? Okay, so today we'll talk about, see whether it's true or not. Okay, but the thing of reality of trading is this: whether it's day trading or swing trading or position trading. Okay, successful trading actually depends on a few things. Okay, three very important ingredients, because number one is trading methodology. You need to have a trading methodology that has an edge. What does it mean by has an edge? That means it's got a positive expectancy. This is very important. Okay. Number two, you need to have robust money management. This is extremely important as well. You must know how to manage your size, manage your risk, and manage your exposure in the market. And last but not least, the correct mindset, okay, which is what we want to share with you today as well, the correct mindset and trading psychology. So all these three are the ingredients of good trading, and there's a lot of work into it. Okay, so the reality of trading is it's easy to get into trading, trading, because you open an account and then the next moment your account is ready, you can start trading. But that doesn't mean you are good at trading. All right, so you need to have these three ingredients. So to be successful, you need to have this knowledge and skills. Trading is a skill, and it requires work and dedication. Okay, and it's not unlike any other business or profession. Okay, so if you're serious about day trading, then you need to treat it seriously. Okay, we'll talk about that in the next few slides. Okay, so basically when we learn about trading, it's best you go out and learn from the successful traders as well. Okay, and the last part, which we will talk and expand afterwards, is trading capital is important as well to succeed. All right, so in terms of looking at trading, what is day trading? Okay, very simple. The definition of day trading is an intraday strategy. That means you will buy and sell throughout the day, but at the end of the day, you will close out all your positions. Okay, so the holding period is very short. Okay, it can last a few seconds. A position can last a few seconds if you're scalping, or a few hours. Okay, but there's no holding, there's no extending any positions after market close. Okay, regardless whether in a profit or loss, you will take it and then you close the positions by end of the day. Okay, now the objective is actually to benefit from the daily short-term fluctuations. Okay, so normally day traders, they trade very short-term charts. Okay, if you are charties or you are looking at technical indicators, normally these day traders will look at those charts with time frames between 1 minute and most probably 60 minutes. Right, so it's very, very short term, as contrasted to other types of trading like swing. Okay, swing is short-term trading, basically overnight. Okay, so you hold your positions overnight, 2 to 5 days, or it can even last several weeks. Right, and this is basically you're trying to capture short to medium price movements. Okay, so your chart time frames, if you're a trader in short-term or swing trading, could be 60 minutes, right? That could be the chart you look at, or probably even daily charts. And then you have long-term position trading. Okay, so this medium-term, 4 weeks holding period, or even longer. Okay, so you're trading to capture a larger price trend, and your time frame in terms of your charts are likely to be daily charts or weekly charts. Okay, so this is the contrast between day trading, swing trading, and also position trading. right? So it's vastly different in terms of day trading. And if whether you're loss or profit, you have to cut your positions and close the positions by the end of the day. All right. But before we get into talking about day trading, let's talk about what is the difference between trading and investing. Okay, this is a very important concept to have. Now, investing is basically building wealth through holding for an extended period, okay, a portfolio of investment assets, okay, as contrasted to trading. Trading is you basically buying and selling. It could be stocks, okay, you can day trade stocks as well. It could be indices, it could be commodities, currency pairs, or other instruments with the goal of generating returns that actually outperform buy and hold, right? So you're trying to beat investing, okay? So this is one of those goals that the traders want to do. They want to beat investing, because investing, your what do you call that? Your return expectations is 10 to 15% per annum, right? So if your fund, you buy stocks to hold a portfolio of stocks and you hold it over, say, for example, a year or two, your expectations 10 to 15% constant or consistent returns is extremely very good. It's something fantastic. Okay, but traders tend to be a bit more aggressive. Okay, their return expectations is 10 to 20% or more in a month. Yes, I know. In a month, yeah. So if you're talking about 20% in a month, basically it's saying that you want to make 1% a day, right? So let's see whether that is possible. Okay, making between 0.5% to 1% a day, right? Okay, that's an interesting difference between trading and investing. All right. Remember, we take questions later, right? So if you have any questions later, you can put into a chat group and we'll take the questions at the end of the session. All right. So when you talk about trading, very important in day trading, capital requirements. Okay, so in terms of our professional trading, we always must treat trading as a real business. Okay, so you need to manage it like one. You have to have your capital requirements. Okay, of course, different for part-time and full-time. Okay, day trading, of course. Now, if you're day trading and you're working for your bosses, it's something that you have to adjust. Okay, so because day trading, obviously, a lot of people are doing it full time. Okay, part-time day trading, yes, you can do that if you trade the night markets, right? So you say, okay, I trade Bursa Malaysia at night after I finish my work. Okay, so you still need trading capital. Okay, how much depends on how big a position you are and your experience. Okay, and of course, you talk about professional day trading, operational costs like screen space, charting software, live data subscriptions. Okay, and for those of you that want to be doing it real time, full time, okay. One thing that you have to take into consideration is you need to have reserve funds. Okay, what does it mean, reserve funds? Okay, you must be able to last through a period. Maybe your trading skill have not been really polished that good. Okay, so the first couple of months you may not have a profitable months. Okay, as you polish and what do you call that, hone your skills. Okay, you will take probably a year or two, right? So do you have enough reserve funds to do that? Okay, these are very important things when you talk about professional day trading. Okay, so this is number one requirement. Okay, so now let's talk about the 5 critical concepts in day trading. Okay, these are 5 critical things that you need to know. Number 1, as I said, trade day trading as a business. Okay, so it must be treated as one and managed like one. Okay, which means what? You need to have a trading plan. Okay, so what are your goals? Okay, what do you want to achieve, let's say, for example, in a year in terms of day trading? So you have to be realistic. Your returns will actually be proportionate to what your skill sets are. Okay, and that's what you call that. Of course, you can benchmark to see you want to make 0.5%, 1% per trading day, but it depends on your skill as well. Right, this is not investing, this is not gambling. We already said that. Then we contrasted again the difference between investing and trading. It's not gambling, right? And number 1, it's not easy money, right? It's tough money. That means you got to work for it, right? Trading capital, we've mentioned that already. Okay, all those operational costs and the reserve funds. Okay, so treat day trading as a real business. Okay, concept number 1. Number 2, discipline to exit trades by market close. Okay, this is very important. If you're a day trader, you're a day trader. Okay, so you must leave and die by the market close. Okay, in that sense. So you must take your profits and losses, and as all trades are to be closed out at the end of the day. Okay, why is this very important? Okay, it basically forces you to have good discipline. Okay, and this particular way of trading, it actually keeps traders from expensive mistakes, especially traders who what do you call that? They can't take a loss. Okay, so they kind of drag their losses, okay, and as the days go on, if they can't cut the losses become bigger and bigger, okay. But then if you are a day trader and you close your positions end of the day, you are basically limited your loss. If you were lost and you didn't know how to take it, but at the end of the day you have to close it, then it's only within that day's volatility, okay. But sometimes day volatility can be high, okay, so not to underestimate that day volatilities can be high as well. And if you don't take a stop losses or adopt a stop loss protection kind of a methodology, you could actually be hurt as well. All right, so that's principle number 2. Principle number 3, trade enough capital. Okay, I can't emphasize enough. Okay, trading capital is risk capital. You must be mentally prepared to lose it. Okay, it's risk capital. That's what it means. Okay, if you trade with fearful money, or more or less can be guaranteed that you lose it. Okay, it's a very strange thing if you trade with fear, because fear is one of those mindsets that you cannot have when you're trading. Okay, it's money you cannot afford to lose. Okay, money you borrowed from some loan shark, there'll be trouble. Okay, that's trouble. Don't use that kind of money to trade. Most of the time you lose. Okay, because you must ask the question, can you walk away from a loss? This is a very important thing. Okay, because in the yellow bar here you can see in trading there's always drawdowns. Okay, drawdowns, that means as you progress, there are times that the trades don't work well. It can be a series of trades that don't work well, so you know your equity can come down. So what do you do during that time? Okay, because that is the time that actually differentiates between the good trader and the one ex-trader. Okay, good traders and ex-traders, successful traders and ex-traders. That's what it means when you have a losing series of trades. Okay, do your losses get worse and worse and worse until you lost all your capital? Okay, so capitalization is very important in terms of the resizing, okay, because it enables you to be able to have a comfortable, what do you call that, buffer in terms of trading, so that, you know, if you suffer a series of losses, hopefully small losses, you can still continue to trade. Okay, this is very, very important. Okay, number 4 critical concept to know is manage risk. Okay, always manage the risk. But taking profit is a very happy affair. You must understand at the end of the day, okay, you want to be a happy person going back at the end of the day, hopefully aim for a profitable day every single day. So we must define our risk reward every time we trade, okay? We look at the risk that we're taking and look at what is the potential profits that we can gain from that particular trade, okay? Measure that kind of risk reward, okay? Weigh that. Then utilize the stop loss procedures. Okay, this is very important. I will emphasize it in another slide. Utilize stop loss procedures. You have a protective stop loss, and you also use trailing stops as your position becomes profitable. Okay, this is very important. So if you're willing to use a stop loss, you also, when you're in a profit, must be able to maximize those profits as well. But very important, do not let your profits run to losses. Okay, a lot of times market give you a profits, but because you are maybe you're greedy, you want more, okay, and then you let your profits run to losses. Okay, number 1, this very important principle is, if you have nice profits as well, be happy to take it as well. Okay, don't be too greedy, because you must know that your time frame is on a daily time frame. You are trading within that day. Okay, so don't imagine that that particular trade can be as profitable as perhaps in terms of the range, in terms of, say, swing trading or position trading. It's day trading. Okay, so you're taking the advantage of only the day's range. Okay, so be very, very aware of this principle number 4. Manage risk, but taking profit is a happy affair. Okay, number 5, and one of the most important things is in terms of your strategy, keep it short, keep it simple. The key principle is very, very important, right? In terms of decision making, when you're day trading, every single what do you call that, a few minutes you'll be asked to make a decision by the market. Okay, if you're trading very short term, perhaps 5-minute charts and all that, every 5-10 minutes or within an hour, you have to make decisions. So if you have a very complex decision making method before you can go into a trade or get out of a trade, then that could be trouble, because markets are moving very fast in terms of a day trading, right? So simplicity always wins against complexity. Okay, method of course must be logical and rational. Okay, have very clear rules of entry and exit. Okay, and of course your stop loss, we spoke about that. But very important, your system must have a positive expectancy. right? So if you don't know what's positive expectancy, okay, basically to mean that after a series of trades, the outcome must be a profit, okay? So check out this concept. You can Google this concept. What is positive expectancy and what is a trading plan which has positive expectancy? Very important, okay? So these are the 5 principles that are very, very critical for short-term trading, okay? Especially day trading. Okay, so let's talk about methodology and trading strategy. So methodology, money management, and psychology are the 3 ingredients of a trading strategy. So you need to have all these 3 things, right? As you move towards away from methodology, once you have sort of mastered a simple methodology, you will find that in day trading, the key is money management and psychology. So in terms of money management is, can you take the profits that's available to you, okay? And can you take the losses, okay? Those small losses if the trade goes against you, okay? So this is where it is very, very important, right? And that relates to psychology as well, how you think about the market, which we will share with you afterwards. Okay, so in terms of methodology, there are so many things that you can use to analyze the markets. Okay, you can use, some people use fundamental data, some people use, candlesticks, Fibonacci, Elliott wave, Dow theory, blah, blah, blah. Okay, all these things that you see over here, right on this page is actually what I've studied over the years. Okay, but the thing is this, when you're day trading, when you're trading such short, what do you call that, time frames, okay, things like economic data may not play a very important part unless you're trading, say, before data release. Okay, so or you're trading an event, something a big event that's happening in your day, right? Most of the time, a lot of day traders, what they do is they use technical analysis. Right, and you find that a lot of day traders also discard a lot of technical indicators and go down to things like price action. Okay, some of you may have heard a lot of this price action. So they're looking at basically naked charts, even that, or they're using only 1 or 2 simple indicators to make decisions. Okay, so the principle of KISS applies here. So in terms of market analysis for day trading, you want to be able to remove as much complexity as possible, right? So you may have learned all these very fancy theories, but at the end of the day, okay, in day trading, you have to remove most of those things and come down to the most simple moving, what do you call that, parts in terms of calling a trade, all right? So when it comes to trading, there are 2 approaches. Obviously, there's what I call discretionary. I feel, okay, what's I feel? Okay, entering and exiting trades based on feel. Okay, so you look at a chart, or you read some news today, or you saw some research fundamental come out, or some hot tips you got about the market, or some hunches. Some people have hunches. Okay, so when you hear yourself saying, okay, I look at this chart, wow, it looks like, I feel I can go in. When you hear yourself, okay, in your head saying that I feel, then you go in a trade. That means you're trading as a discretionary method. Okay, so discretionary method, the decisions are made by the trader. Okay, what does that mean? Okay, okay, let me contrast the second method so that you understand better. Okay, contrast it with systematic or mechanical approach. Okay, systematic and mechanical approach is basically rule-based. Okay, you have rules to enter the market, you have rules to exit the market. It's very structured, very disciplined, and there's no emotional. Okay, hopefully there's no emotion. Try to remove emotion from the equation. Okay, so the decisions are made by the methodology itself. Okay, so that's the difference between discretionary and systematic. Okay, discretionary, the decision is made by a trader. He feels that, okay, it's time to go in, he goes in. But in systematic trading, the method tells the trader, okay, now it's time to, okay, I've set up, I have a trigger, you go in and you key in the order to go in. Okay, so your trading decisions are based by methodology. Okay, so I feel even for day trading, the systematic way or a mechanical approach way, okay, has its superior advantages. Okay, because number one, you can measure the results. Okay, I feel approach it's very difficult to measure the results. Okay, because it's very difficult to pin down how you made that decision. Okay, whereas in mechanical approach, if you use that, you can test. Again, testing is very, very important. If you are able to test the system, then you know the numbers of your system. Right, so on the long-term basis, do you have a trading edge? Okay, that's what I talk about. The trading edge, it's basically from your numbers whether you know there's a trading edge. Okay, so these are the two approaches basically to trading. Okay, and I encourage you to venture to looking at the second method, systematic or mechanical approach to trading, very rule-based entry and exits. That will probably be the best way to start. Okay, that's what I recommend. Right. So in terms of setup, trade and entry exits, okay, you need to have rules with that. Okay, so it's very important. Exits actually is one of the most important. Okay, the golden rule is all about exits. Okay, so anybody can enter in the trade. Okay, even a monkey, if you know how to key in, he can enter a trade, but the exit is where you make money, right? Or that's where you control your risk. Okay, so in terms of exit strategy, there are of course things like stop losses, how to profit take, okay, or if you exit because the trade is not going anywhere. Okay, if the trade is not going anywhere or it's in a sideways market, you want to give your capital a better run for its money somewhere else in another futures contract, then you exit because this particular market you're trading for this time frame is not working well. All right, so about exits, this is the number one principle when you're trading, especially futures, right? Do not trade if you do not have a defined stop loss strategy. This is very important. Okay, no matter how good your system is, no matter how good your methodology is, you'll be wrong once or twice or even 4 times out of 10. Right? So if you don't have a defined stop loss strategy, okay, in the long run, you're going to meet with accidents, and those accidents are going to take you out of the market because you have losses that you cannot recover from. Okay, so why do you have a stop loss? It's because you are going to preserve your capital. Okay, preserve your capital for the winners that will come. Okay, this is a very important concept. You preserve your capital for the time that your system is giving you the winners, right? So why spend all your capital on trades that are not productive, right? Some people cannot take a loss. Okay, and I've seen this a lot, even in where with the traders that are higher. All right, they have sometimes this very strange thinking that I cannot lose. I don't want to lose. Right. So because you don't want to lose, then you lose your capital, right? Because you cannot accept a loss. So immediately put a stop loss every time you put an order into the market. So you enter into the market, put a stop loss, okay, a protective stop loss just in case, okay, your trade is wrong, okay, and it's very likely in series of trades you will meet trades that you will go wrong. Okay, so even Victor Niederhofer, the writer of this fantastic book called The Education of a Speculator, if you have a chance to read this book. He's talking about George Soros. He has Victor worked with George Soros for many, many years, and all the time when he hears George Soros speaks, George Soros never talks about his winning trades, but he's talking about how he talks about his losers. Okay, he talks about his biggest losers. Okay, and what they can learn from there. All right, so very important. Make sure that you have protective stop losses when you trade futures. Right, so types of stocks, of course, you can explore this fixed dollar stops or percentage of price stops or technical stops. Right, I would of course recommend technical stops. Okay, and of course technical stops needs to be within your money management stops as well. Right, so this is very, very, very important. Okay, the other one is profit taking. Right, so in day trading we are happy to take our profits as well. Okay, so if you have a systematic strategy to take your profits, fantastic. This is to fight the emotion of greed. Okay, so you want to hold again. It's the same thing as stop losses. You want to be right also, right? You say I want to achieve this kind of profit. Okay, and you want to be right. Okay, but always have a systematic way so that you can fight this emotion of greed. Okay, because that's the key to consistent results in terms of day trading. Okay, day trading requires consistent smaller profit targets to be successful. Okay, you need to be constantly collecting the profits that you can get from the market. Okay, and keep them into your what do you call that, your account. Right, so the types of profit takes are pretty similar. You have fixed dollar profit takes. You can use percentage of price profit takes. You can use technical stops, especially trading stops. Okay, so these are the few types of profit taking strategies that you can use. Okay, so besides those things, a very important habit to do, and this is also required by our own traders, they have to keep a trading log, okay, of what trades they do, okay, long, short, entry price, gross profit, okay, and also analyze what's the net profit, what's the winning percentage, what's the average win, average loss. So all these numbers will help you know your trading system better, okay, and this is extremely important because it gives you a record to review your trades, okay. So not only keeping the numerical numbers, also keep your a tab on how's the emotional state when you're trading. Okay, and what are the lessons that you learn? No, in your remarks, what are the lessons that you learn inside? You put it inside your trading log as well. Okay, otherwise known as a trading journal. Okay, this is very, very important. Okay, one of the disciplines that our traders use in terms of on the weekly basis, they have a trading journal where they put in all their thoughts, okay, how they went into the trade, okay, what was the rationale for going to the trade, what was the emotional state at the time they were trading, okay, of that particular entry, and what are the lessons learned. Okay, this is a very important thing. Again, it takes a bit of discipline to do it, okay, but it's very important, right? And once you have all those numbers, you, okay, pardon all these wordy things, don't worry about that, okay? Once you have all those numbers, then you can turn out the, what you call the metrics, your system's measurements, okay? Net profit, winning percentage, okay? This winning percentage was a crucial measurement. Win-loss ratio, which is the average win against average loss, is a crucial measurement. Okay, all this will you use to determine your edge. All right. So let's move on, backtesting. All right. So if you have numbers, then you can backtest your system, whether your system is good or not. Okay. And one of the things I encourage for those who are very new in trading is to do paper trading, okay, or forward testing, okay, simulation of actual trading of your trading system with live data. Okay. Nowadays it's quite affordable to do that. Right. So if you have a trading methodology or a system that you like, okay, forward test to see what are the results like. Okay, just to confirm that this particular strategy works in terms of live data. All right. So money management. Okay, this is one page on the key things to note about money management. Okay, number one, preserve capital. Okay, very, very important. That's why you need to have a stop loss. Preserve the capital for the winners that will come. Okay, always trade with your stop. Risk no more than 5%. 5% is actually a lot. Okay, it should not be more than 5%. Normally, we trade within a 1-2% risk loss in terms of every single trade. Calculate your win-loss ratio, and this is very important. Okay, what does that mean? Your average win over your average loss, okay, should be at least 1.5 to 2.2 times more. What does that mean? Okay, so if your average win is, say for example, 500 ringgit, okay, and if your average loss is 250 ringgit, then you actually have a 2-to-1 ratio, and that's a very, very healthy ratio. Okay, so you must always aim for an average profit that's larger than your average loss. Okay, so that's a very important key in terms of measuring the system. Okay, so use position sizing. That means increase sizes only when you have profit and decrease size in terms if you have losses, right? So don't use a method where if you're losing money, you increase exposure. Okay, that's a wrong approach in terms of increasing what do you call it, in terms of position sizing. So only increase a position size when you are making profits. All right. So these are the key 5 points in terms of money management for trading. Okay. So now let's get into 6 mindset keys to success as a day trader. Oh, how come okay, no worries. This time I put 8. Now discount 6 only. Okay, never mind. Okay, the first thing is this. Making mistakes in the market, learn from others people's mistake is better than making your own. Okay, so the best thing is to realize that what those mistakes are. Again, learn from other people's mistakes. Okay, it's less painful. Definitely a very good recommendation by Warren Buffett. Okay, and these are the mistakes by losing traders. 90% of why the traders lose money. Okay. Number one, not knowing the difference between long-term investing and trading. We've spoken about that. Okay. Underestimating risk and leverage. Okay, this is something that when you're trading futures, you need to understand the power of leverage. Okay, because it enhances your returns and it also can enhance your losses. Okay, this is very, very important to know. Deception that trading can look so simple, right? So some of the the fellas that made money in the stock market in year 2020, okay, because of the huge rise in certain sectors of the market, okay, thought that, hey, simple, very simple to make money, okay. Then in 2021 realized that it isn't that simple, okay, right? You can make some money, but you don't know how to manage your resources, so you lose of it, okay. The fourth, no trading before trading. Okay, remember, this is a skill. You need to have some trading, okay, and you need to have some experience before live trading. Okay, so the DVTC, okay, which we're going to talk later, the derivatives virtual trading challenge is something that you can use this as your part of your training as well. Okay, start off with enough capital. If you start under capitalized, that's going to be bad. Okay, remember, okay, use money that's truly a risk capital. Okay, overconfidence is normally the beginner's mistake. Okay, they make a few good trades and they think, hey, trading is so simple, right? The eighth thing is wanting to be right instead of making money. Okay, your ego is not important. The ninth is very popular, listening to Oppo. What's Oppo? Other people's opinion, news, rumors, social media, all these things. Don't analyze, just listen, take tips, and then punt. Okay, punting is what? Punting is gambling, of course, right? So you're trading, you're not gambling, right? Trading for excitement, of course, definitely the wrong reason. Okay, trading needs to be treated as a business, serious business. Okay, lack of money management. Okay, no risk control, no stop loss, no methodology. Okay, chincai trade is called chincai trade. Okay, buta trade. Okay, you need to have a methodology. Okay, as I recommended, you need to have a systematic way of trading. Okay, having trading rules. Okay, you have trading rules you don't want to follow, so it's a problem. Okay, that's a trading psychology problem. Having unrealistic expectation of your trading returns, especially compared to your experience. Okay, so trading can be profitable. Okay, it can be wildly profitable as well, but you must be good at it. Okay, you must be very good at it. Over trading is trading too much compared to your capital and frequency. Okay, this can happen a lot in day trading because people take very fast trade. At the end of the day, they have a whole long list of trades but no profits. Okay, right? That's good for brokers, but then it's trade. If you trade like that, it's not good for you. Okay. Lack of discipline, lack of patience, okay, seeing trading as a hobby instead of a business, okay, and trading by hunches and without a plan. Okay, so these are the 20 top mistakes that traders lose money, why they lose money. Okay, so learn from this kind of mistakes. Okay, hopefully you don't do it, but sometimes you will have to learn through the hard way. Okay, but I recommending you remembering all these 20 mistakes, right? And lastly, the mindset of successful traders. What is the mindset? Take responsibility for your decisions and all outcomes. Okay, never blame the market or never blame somebody else for why you're not having results in your trading. Okay, this is mindset number one, very, very important, right? Number two is trading with the flow. Okay, so if the market this means that you want what the market wants. So, right, if the market wants to go up, then you follow. Okay, you go with the flow. Right, that's a secret thing. Don't go against the market, okay? Because the market is way bigger than any one of the participants, right? So trade with the flow. Okay? When you trade with the flow, it's a lot easier. Okay, don't trade against the flow, right? Number three, understand the market is not an enemy or threat. Okay, so if you approach the market thinking that no, everybody is an enemy, right? Then you have a problem. Okay, and most of the time, if you're having that feeling, is you're not taking the trend as your friend, you're taking the trend as your enemy, so you're trading against the trend. Okay, normally that is a problem. Okay, if you think that, wow, every time I go in, the market tries to kill me, right? Then there's something wrong. There's something very wrong, because the market doesn't do that. The market actually doesn't care about that. Okay, it probably doesn't even recognize who you are. Right, so basically you're trading against the trend, okay, which is number two. You're not trading with the flow, right? That's why you feel that the market is always against you, right? Third, of course, trade without fear, right? That's one of the things very important as well. If you're trading with capital that you cannot afford to lose, then you're trading with fear. That's going to be bad. Okay, that's one of the mindsets that you cannot have, trading without fear. Then you cannot put in a trade, right? The fifth, understand the probabilities and your edge. This is very important in terms of your mindset. If you don't understand whether your system is successful or it has an edge or not, then you don't really know whether it's going to give you the true what do you call that, profits that you earn over a long time, or what do you call that, consistently, whether you can see those profits or not. Okay. And lastly, you have to see the markets objectively, right? You got to trade the reality of the market. Okay, trade what the market is showing you, and do not trade. Okay, don't imagine that the market has to go from here to here just because you wrote on your notebook that, you know, in my view, the market should go from A to B, because the market doesn't care about your opinion. Okay, basically, markets don't really care about everybody's opinions, right? It's the mass, what do you call that, decisions of all traders that move markets. Okay, so the markets are always, what do you call that, larger than us. So see the markets objectively and go with the flow. Okay, so these are the 6 important mindsets in terms of successful trading. All right. Now we are going to go into, maybe this is a section you're waiting for quite some time. Okay, what are the simple day trading setups you can implement? And these are the setups I use as well. Okay, so I'm going to show you a simple method to trade. Okay, that's what this basically means. Okay, and okay, ABC, entry and exit. I've been teaching this for quite some time. Okay, it is a very simple system that you can identify a trade setup. Okay, it does not require you to have very sophisticated technical analysis software. That means the decisions that you make are pretty easy to make, okay, and easy to see, right? So it also shortens your time in terms of learning it. It's easy to master, and you'll be trading predominantly with the prevailing market trend. Okay, basically this is a breakout system, and you'll be trading with the trend. Okay, you can also catch early reversals, okay, if you use this method, and it's versatile to be applied to all markets and all time frames. So you can apply it for position trading or swing trading, and it's especially helpful in day trading as well. Okay, so let's see what this is all about. Okay, how simple can this be? That's ABC. All right, so this is setup. Okay, buy setup. Okay, so in terms of a buy setup, a market has been coming down. So you're looking for a turning point. You're looking for an opportunity to buy. Okay, so you will see these bars. Okay, you have a bar that created a low, then goes up to form a intermediate high, and then come down to C. Bar C is come down lower, but does not break A. Okay, it doesn't come down lower than A. So on the right side, okay, same thing. A market's move down and then goes up to B, okay, and then come down to C, right? So when he's formed this, what we call an ABC setup, you draw a line across B, note what is the price, okay? So let's say, for example, the price is say 3,200, okay, this price. So once the prices move above 2,000, say 2,301 by 1 tick, okay, then it has triggered a buy signal. Okay, I'll show you some examples afterwards, right? This ABC buy setup. Okay, it's as simple as that. A minimum of 3 bars, and if more bars are in between, the better. Okay, normally the ideal one would be about 5 bars. Okay, that means 2 bars on the left and 2 bars on the right, and 1 bar on top, which is classically called a fractal. Okay, you can use a fractal indicator to mark the B point as well. Okay, and this is if I draw a wave, how the wave looks like, right? So market comes down to A, goes up to B, comes down to C, and then breaks B. That is your buy trigger, right? So how does a sell trigger looks like? Okay, but before we go there, let's have a look at the FKLI. This is the 15 minutes chart, okay? And this is chart, okay, quite recent, right? When is this is June the 1st, okay? Let's look at some opportunities on June the 1st, okay? You can see the setups here, ABC, okay? So you have a buy signal at 1417, all right? And this is within the day, this is within this is, yeah. Okay, so you can see ABC, there's a buy signal, 1417. There's another buy signal over here at 1420, right? And you can see over here, ABC, another one at 1428. And you can see basically once it breaks out, okay, this is the setup bar, and it breaks out over here. It passes through B over here. Within 1, 2, 3, 4, 5, 6, 7 bars, you will see profits within the next 5 bars usually, right? If it's going for you, right? That means 5 times 15 minutes bar. You're basically saying in the next 1 hour, okay, the trades will start developing. Of course, some trades will develop faster, right? But these are what we call the day trading signals on 15 minutes. Okay, buy setups. Let's have a look at palm oil. Okay, palm oil, of course, this is on 60 minutes. Okay, this is an older chart, but just to show you the setups. Okay, so these are the A, B, C. The lines are all B triggers. Okay, you buy over here, another A, B, C, then you buy over here, another A, B, C, you buy over here. Right? So it's how to catch day trading on FCPO 60-minute charts. Later, if you have time, I hope to be able to bring you to some live charts. These are static charts. Okay, this is 15-minute. Okay, this is a more recent chart. Okay, I downloaded this on June the 1st as well. And you can see right over here, the buy opportunities in terms of the 15-minute charts. Right, all this are the buy signals. Okay, very simple to recognize. Okay, basically you have what you need to train is you need to train your eye. Okay, that's a key thing to recognize this pattern. Okay, A, B, C, breakout. Okay, breakout where? Breakout this bar. So you go and buy this bar. Okay, another one. So there are multiple signals in terms of this 2 days of trading. Okay, this 25th and this 26th. Okay, and of May. Right, those are the trading signals available on 15-minute charts. So when we are trading, say for example, either FCPO on day trading method, you probably be using charts between the 5 to 15 minutes charts. Okay, those are the in terms of looking at ABC signals, those are the ideal in terms of trading the day trading. Okay, now for FKLI, because the volatility is slightly less, FKLI you may have to use slightly longer term in terms of the charts. Maybe you have to use a 30-minute charts, okay, because 15 minutes charts you may not have enough volatility, right? So in terms of you need to adapt a bit for the FKLI. Because the day range is not so large, okay? So perhaps in terms of the FKLI, it probably be slightly better in terms of results if you do swing trading, okay? But for FCPO, of course, it's excellent in terms of the daily range to trade intraday. Okay, you can see from the range, palm oil trades above like a daily range about $100. Okay, that's about 2005 range that you can trade on a daily basis. All right, so let's look at the sell signal then. Okay, what's the sell signal? A sell signal, you come with a A top. Okay, A is the high, followed by a B goes down, and then followed by a C. C tries to recover, but C doesn't go above A. Okay, so when you have that set up, then you draw across a line a B and note the price, and you sell it one tick when it moves one tick below. Okay, so it's basically just a mirror image of the ABC buy setup. Okay, so basically here it is. You have an A high, followed by a B low, and followed by a C high, which does not exceed A, and then it comes down to break the B. Right, that's your trigger. Okay, so in terms of the wave, you can see over here, that's how the pattern develops. And this is some examples. Okay, this is also an example from May 31st. These are the short signals in terms of the FKLI hourly chart. You can see here A, B, C. Okay, then it goes down. So this developed into a pretty good trade. You shorted it about 27.5. Okay, you went down to about 14.16 before it rebounds. So there's a good 10 points there, right? 10 points in FKLI is 500 ringgit, right? It's fantastic because you consider the margins that's required is a region of 4,000. So a 500 ringgit move on this one signal, you basically got you got about more than 10% return on this one move. Okay, so is it possible to make 1% a day? Yes, it is. It is possible. Yeah, it is possible. Right. Right. It must be good, of course. Right. So another ABC signal here, 1, 2, 3, and this you shorted at 14.13, and it went down to about 14.07. Okay. So this move is not as aggressive as the other one. Okay. This is what do you call that? 6-point move, but very decent as well. 6 times 50 ringgit is also 300 ringgit, which is a very decent return. Okay. So let's look at another chart on the short sell. Okay, so this is a larger one of what we saw just now, right? So the various sell signals in terms of the trend, as you see here, even on an intraday basis, the last couple of last 1 week of May has been a down market for FKLI. So this is an hourly chart. You can see all the triggers I've drawn over here. All right. So each one of them has potential to give you a decent profit. Okay, let's look now at the 15 minutes charts, a bit shorter. Okay, so 15 minutes charts because of the tighter range, right? So your expectation from the signals is, it may not be as well developed as the longer term charts, right? But these are the signals as well for the 15 minutes charts over the last couple of days of May. And then the FCPO 60-minute chart. Okay, so over here, you can see the ABCs. I've drawn up the ABC setups, and these are the cells, the various signals. These are profitable as well. Okay, I didn't draw the up. These are ABC buys as well. Okay, but I just drew the ABC cells in this particular chart. ABC. Okay. And this is the 15 minutes on CPO. Okay, all the signals. This was also towards the end of May. Right, you can see. Then you can see over here within a day, right? Let's say, for example, from 30th, this one day, okay, on the 30th itself, you see the range is really huge, right? 3500, okay, and towards the end of the day, it was trading 3289. So it's 100 over points in terms of if you are able to catch those what do you call that, moves. Okay, so on a 15 minutes chart move, say for example this particular signal right here, short at 3392, okay, and in the next 1 2 3 4 5 about 10 candles, okay, or 10 bars, you right at the 3350, yeah, like 40 points up. Okay, 40 times 25, that gives you a 1,000 ringgit profit, right, on this one move. Okay, margins on palm oil now, I think it's 9,000, if I'm mistaken. So 1,000 on this one signal divided by 9,000. Well, that's like, again, more than 10%. Okay, from your margins. Okay, so yes, it is possible if you read the market correctly to get those signals that you can make you profitable. All right, so this is the written instructions that I already explained to you. I will not be going into this. Okay, so basically, I want to emphasize, if there's more time or more bars between B and C, right, and subsequently breaks out, then the signal tend to be better. All right, and ABC setups can be identified in any time frame. Okay, so it's a fractal nature of the market. This pattern repeats itself in different time frames. If you go even to the larger weekly, daily time frames, you will also see this ABC, right? So you can use it not only for day trading, you can use it for swing trading as well as for position trading. All right. So yes, where do you put your stop losses? This is important as well. Go in a trade, where do you put a stop loss? Okay, so let me show you graphically instead of reading this. Okay, so let's say, for example, you enter at B, right? Where do you put your stop loss? You have two options. You can put it below C, or you can put it below A, right? If it's below A, that means when it breaks A is a total change in trend. Okay, over here, when it breaks A, you can actually go short as well. Right, so this is where you put your stops, at the bottom of A or the bottom of C, right? And if you sold, okay, if you are in short position, you took a short position, you sold below B, then your stop loss can be at C, or it can be at A, above A and above C. Okay, so these are where you put your stop losses, and this is also where you measure your risk. Okay, what's the distance between C and B? Okay, whether this risk is within your money management or risk management rules, right? Okay, so if you are a professional day trader, see, these are the setups that you need. Okay, your trading execution screens and platforms, of course, your charting software. Okay, day traders tend to trade technical signals. Okay, have a strategy tested and forward tested, right? Of course, have a brokerage account open with your favorite brokers. Okay, tonight we have RHB with you. Right, so connectivity and market access, of course, you need to connect it to the markets to execute, and also the market data, and then your workspace, your PC, your monitor setups for your charting. Okay, so this is basically what you need to start a day trading setup. Okay, so I'm gonna, let me see. Yeah, I have some time to go to live chat ups before I pass to Q&A to Shane. Let me share my browser and take you to some live chart setups of what we can see today. Okay, so there's a new share. Okay, I hope you can see my screens. Okay, so what I've drawn here, over here, okay? Okay, if you see my screens now, I'm showing you a 10-minute chart, okay, applied on CPO, all right? And basically what you can see here, this is a 2-day trading window. You can see right here or here. From this point is today's action, okay? So today's action, what can we have actually two signals. We have this sell signal right over here, which is at 3372. This is A, B, C. Of course, market open over here. We didn't have any signal until here, right? It was triggered at 3372, right? And after 3372 was broken, you could see that there was a huge move. Okay, the down move was actually quite aggressive. Okay, 3372, if you will signal that the day actually ended at what price of it? At the 6 o'clock, it was at okay, at 6 o'clock, it closed at 3320, right? So there's like a 50-point move over there, right? And then of course, just now, as we were talking, the market made another signal right over here, another sell signal over here, okay, or even here, it triggered at 3317, okay, and went down to about 3286, okay? So that's good for another like 30 to 40 points, okay? So these are the moves for today, right? So if you say between 3372 and say right over here at 3320, right? If you get sorry, yeah, 3320 market close, right? Something like 50 points, right? So 50 times 25 ringgit per point, this is a 1,250 ringgit move, okay? Just this one signal, right? And if you go back to, say, for example, here on the 1st of June, okay, we have a signal right over here, a buy signal right here, which is 3282, okay? And basically for the whole day it traded, and you know, you also could get a profit around about 30 points, okay, which is about 750 ringgit, okay? And then you have on the next day another trigger right over here, right, triggered at 3313, and that was a fantastic move on Friday as well, right? So you can see that there are a lot of opportunities in terms of using the ABC on the chart, okay? So let's see whether I can show you a, say, FK line, okay? That's not, some people like the index as well, so let's show the FK line. So FK line, let's look at slightly, FK line, you need to look at slightly longer chart, okay, perhaps a 30 minutes. Okay, 30 minutes, yeah, 30 minutes, we have some setups, okay, you can see right over here. Or is this the hourly? I may have drawn the hourly, but never mind. Okay, let's draw the hourly. I think this is the hourly, yeah. So in terms of FKLI, it's a bit better for swing trading, okay, rather than short day trading. Day trading you still can, but it's a very short amount of profits, right? So in you can see the ABC move right over here, a sell at 1400, okay, took you down to at these levels. In fact, the trend moved down all the way to 1372, which is quite a big move, okay? So that's something like a 30-point move on the FKLI over the last couple of days, which is quite a large move, okay? So in terms of trading FKLI, perhaps swing trading would be better recommended. But you want to do day trading, the palm oil contract has a lot of the volatility as we saw just now, right? The palm oil, incredible movements that you saw just now on the palm oil, right? So these are all the movements that we saw. All right, so I'm going to pass back to Shane for questions. So yeah, back to you, Shane.
Thank you so much, David, for sharing with us, you know, your strategies, as well as how do we day trade the futures market. So if you have any question for David, you may write in the Q&A box. We'll get back to the question and answer session in a short while. But in the meantime, let me call upon the next speaker to tell more about DVTC as well as their offerings. So he's none other than Mr. Eric Lim, who is the manager of business development and strategies, group futures and commodities from RHB Investment Bank. Hello, Eric. How are you today?
Hi, I'm good. How is everyone?
Yeah, very good. Perfect. So maybe you can begin by sharing your screen.
Okay. Um, David, could you please unshare the screen, please?
Okay, I have to unshare. Huh? All right, stop share. Pardon me. Okay, back.
Okay. Okay. Good evening, everyone. And thank you, Shane, for the lovely introduction, and also to David Lo as well for the very informative and interesting session as always. And I hope everyone is taking good care of themselves. I'm Eric, and today I'll be speaking a little bit about the bank, the features, products, services, as well as some of the ongoing campaigns that are currently being run over at RHB. And after that, we're going to go through some of the details to get you ready and sorted out for the Derivatives Virtual Trading Challenge, or DVTC for short. So real quickly, I think we're just going to go through the disclaimer over here. So everything that I share here today is for general information and for sharing purposes only. So over here from the screen, our RHB Group has presence across the Southeast Asian region with more than 14,000 employees all around. And the RHB Investment Bank has 34 branches located all across Peninsular Malaysia as well as East Malaysia. So our RHB Investment Bank is very grateful that we are able to offer products from 6 established exchanges all around the world. So what I'm going to show you here over the next few slides are all of the products they're currently being offered by all of these exchanges here. So first of all, we have Bursa Malaysia and their suite of products, as you can see from the screen, followed by Hong Kong Exchange, Intercontinental Exchange, Tokyo Commodity Exchange, Singapore Exchange, and the last being CME Group. So over at RHB, we offer a total of 77 futures products, all available at your fingertips, ranging from commodities, financial, indices, futures products, and many more. Also, I'm excited to share with you guys that we'll be offering 8 new smaller size futures products from CME Group very soon. So stay tuned for the updates. Moving forward, we are over at RHB, we have 3 futures trading platforms that are suited for everyone's trading needs. First of all, we have ASGTS, which is the most basic one, but it is sufficient for most of our trading needs. Followed by QST for the more sophisticated traders, and lastly, CQG is recommended for the semi-pro or the professional traders. Now, all 3 of these platforms offer basic charting tools as well as mobile application for everyone's convenience. However, one thing to note is that CQG is not available. Does not have a desktop application. However, it is accessible through the web browser. Vice versa, ASGTS has a desktop application, but it is not accessible via the web browser. And over at RHB, we have a dedicated research team who diligently releases reports, some with technical analysis on a daily basis. So to access this, all you have to do is head over to rhbtradesmart.com and log in with your credentials, and you'll actually come to this page. Now, to access all of the reports, you just have to click on research here over at the top, and you'll be able to access a variety of reports, as you can see here. To access those, you can click all. You can view all here to access all the reports, or you can head over to topic and search technical analyzer for those reports with a technical analysis, and this will bring you over to this page. These are some of the examples of the reports that are available, and as you can see, it has technical analysis and outlook for the day. So over we are currently running a few campaigns. First of all, in celebration of the Year of the Rabbit, we have the Grab It 2023 Futures campaign, which will be ongoing all the way until the end of July. So as usual, you can scan the QR code available on the screen here for more info on the campaign, as well as to check out the TNC and the FAQ. However, just a quick summary for this campaign, all you have to do is trade 100 ringgit worth of gross brokerage to be eligible for a random draw in tier 2 of the campaign, or 1,000 ringgit of gross brokerage to be eligible for tier 1 of the random draw. And you'll stand a chance to be one of the 248 winners to get a piece of the 100,000 ringgit prize pool. Concurrently, we have a mega campaign, which is known as the Electrify Your Trades campaign. Over at this campaign, oh, sorry about that. Okay, so with this campaign, you could be one of the lucky 248 winners to actually win some rewards from this campaign, or you can actually, or even for one of them, it'll be even better because the person can actually drive home with a Mini Cooper SE. So trade futures with RHB right now, and you'll be able to, and you'll be eligible for both campaigns simultaneously. Now come to the very exciting and awaited derivatives virtual trading challenge by Bursa, and this will be the third one organized by BMD. The challenge will run for a 1-month period starting from 1st August all the way until the 30th of August. Now, to register for this campaign, all you have to do is head over to bursamarketplace.com or just Google DVTC 2023. However, do remember to fill in your credentials and register for this campaign before the 21st of July. And also from now onwards, all the way until the 21st of July, it'll be a familiarization period where you'll be able to log in, test out the systems, get more familiar with it, or you may even try out some of the trading strategies that are shared by David here today. And also, please remember to check out the TNC and the FAQ for this campaign as well. So once you are registered, you will receive this confirmation email, as you can see from the screen, and you can click on this link over here to access the web browser version, or you may even download the mobile applications from these two links over here. Now, how does the challenge work? So basically, your virtual trading account will start with a capital of 100,000 ringgit as of the 1st of August. And the objective of it is to increase the balance of your account, is to have the highest account balance at the end of the challenge. So to do this, all you have to do is trade 20 lots of futures products, whereby if you buy one lot and sell one lot, it will be considered as 2 lots traded. And to do this, there'll be 6 available products for you to trade. First of all, we have FCPO, followed by FEPO, FGLD, FKLI, FM70, and F4GM. Now this challenge is actually very beneficial for everyone, all the way from beginners to experienced traders, because not only you're able to experience real-time trading, but you'll be able to have a feel of the market as well. So that's why it is important to understand all of the contract specifications for the available products, because you'll be trading based off the actual specifications and the actual timing for each of those respective products. Now, the experience from this is great, because these are all based off real market conditions, and it will definitely be useful in your trading journey. Also, this challenge, it is a good opportunity to also try out some of the tests, to try out some of the trading strategies that you've been itching to try. Now, for the prizes, while the objective for the campaign is to raise your virtual capital by the end of the challenge, the prizes from here are actually very real. So the top 20 participants with the highest account balance at the end of the trading challenge will be able to win actual cash prizes. First of all, we have 10,000 ringgit for the first place, followed by 7,000 ringgit for the second place, 5,000 ringgit for the third place, and so on. So so please do sign up for this challenge as soon as you can, and it will definitely be an interesting one. Also, do remember to pick RHB as your preferred broker mentor, as we have many more webinars and workshops lined up for you until the end of the year, and this will definitely be an interesting one. So I guess that's all from me. Thank you, everyone. And if you're interested to open a futures trading account, please scan the QR code here on the screen, or you may reach us via email at rhbib.futures.bdev@rhbgroup.com, or via phone call at 03-9280-8820 for any inquiries at all. So thank you. I'd like to wish everyone happy trading. Take care and have a nice evening.
Thank you so much, Eric, for sharing with us what are your offering, as well as the details about derivative virtual trading challenge. Now, of course, if you want to test out future trading in a risk-free environment, you must not miss this trading challenge. All right. So if you have any question for both our speakers, you might write them in the Q&A box. We'll address them accordingly. Okay, write them in the Q&A box. Yeah. So we have got a lot of questions on my panel.
Fantastic.
So the first question is it true that 80% of the beginner day traders lose their whole capital?
For me, good question. More than that, more than 80%.
More than 80%. Wow, that's very scary.
Okay. Basically, 90%. Just I said, why do 90% of traders lose all the money? And there are 20 reasons behind that. Okay. So if you can avoid all those 20 mistakes, then you avoid being a casualty. Okay. A lot of times because traders come in thinking that's so easy to enter, so simple. Just go in, buy and sell, then they don't understand that money management, risk management, and greed will come in, right? And then that's where they lose a lot of money, right? Yeah. So 80%, I think it's more than that. Okay. So I think it's 90%, perhaps even more than that. Okay. Yeah. So you want to avoid to be in that group, then please those 20 questions or 20 points you need to put in mind. Okay. And yes, I think you Shane, you answered the question by having the slides available for review. At least the video is there, right? The video.
Yeah. We will send the replay link to you.
Yes, fantastic.
So you can refresh the strategy. How do you execute ABC setup?
Yes. So that's the answer to the question. I hope that answers your question.
Yep. So 80% is understated. 90% is. The next question is by Jessica. So you talk about position sizing. So how do we exactly do position sizing?
Okay. Right. If you want to do very precise position sizing, then you need to have the numbers of your trading system, right? So I know the numbers for my trading system. Okay. So I know that my maximum drawdown. Okay. So my maximum drawdown on my trading system is it may not be necessarily the ABC system. I use even simpler than ABC. My system drawdown is about 7,000 per contract. Okay, that's my maximum drawdown. Okay, so for me to be safe, I will have at least double or triple that kind of margins available. So I'm playing it very safe. Okay, so for example, I would have probably say 20,000 ringgit per contract. Okay, so now if you use a fixed size contract, okay, fixed size money position sizing, that means that every 20,000 available equity you trade one lot. Okay, that means if you have say 100,000, then you are able to trade 5 lots. Then you make enough money to have 120,000, then you increase 1 lot. Okay, that's how I do my position sizing, right? In terms of increasing it. So if I have a drawdown from 100,000, I trade 5, and it's now at 80, and 80 I'll trade 4, right? So that's how I do my position sizing. I hope that answers the question for Jessica.
All right. So how much do you think is a good amount for an average trade for professional trader versus a beginner trader?
Good amount. Sorry, I
think what she was asking is capital. For
okay. So I'm a full-time trader. So kiasu. I have something like 20,000 per lot. So I'm basically if you consider the palm oil, I trade palm oil mainly. If I do that, I basically double the margin. Okay, so every single what do you call that, a lot of palm oil I trade, I use 20, right? But a lot of people use less. Okay, but you must know your numbers. Basically, I'm using the numbers of my system. My drawdown is that much. Okay, so if you know your number, then you can precisely know that particular figure. So if you want to be a professional trader, you must know that number. You must know that so that you know that your system will survive those drawdowns. Okay. So, but at least I think the minimum is to have at least double the margins required. Right. That's a very safe amount to have for a beginner or even a professional. Yeah. So I would say a rule of thumb would be at least double the margins, if not more. Yeah.
All right, understand that. Now, David, I know that you are an avid reader. So the next question is, what are the books or web resources that you recommend for beginners who have zero knowledge in futures trading to learn about trading?
One of the best websites to go to is Bursa Malaysia website. Okay, this fantastic knowledge center in the Bursa website. Okay, where you can find all the resources. Okay, in terms of trading futures for those of you who are new. Okay, you also find a lot of videos there, including my videos as well. Okay, so you can find ABC system in other videos besides the video that Shane is going to share with you. That's one way. Okay, but if you ask for my favorite books on trading, is I can't recommend enough this book by Bill Williams called Trading Chaos. Okay, and this is one book that my sifu also like. That's why. Okay, so I recommend that Trading Chaos. Read the second edition before you read the first edition, right? By Bill Williams. It's a fantastic book to start to trade the reality of the market. And the book itself talks about a lot about trading psychology and talks about the various levels getting from beginner to expert and what it takes. Okay, so that's a great book to start. Okay, and it's a very entertaining book. And you also get a very similar method that what you see today. And it's something that you can really use. Okay, so start with the Bursa website. There's fantastic resources on the mechanics of trading futures. And of course, also come up with Bill Williams' book on
all right.
trading chaos.
Yeah, I'm
Hope
sure
that
Eric,
answers the question.
you have any input to that? Like, where can they access RHB resources?
Actually, we have all of the research reports. They are very informational with outlooks as well. So actually, we have quite extensive database. So please check it out over at rhbtradesmart.com.
All right. So the next question is by Joel Yo. Is ABC strategy suitable to use in trading 1 minute chart? As you know, we know there might be a lot of noises or breakout in a smaller time frame.
Thanks, Joel, for that question. Wonderful question. 1 minute chart, you'll be too busy. Okay, you can. Yeah, because the nature of the price is fractal. What it means by fractal is in every single time frame, it will repeat the same patterns. Okay, but as well, in as you say, the very, very short time frames have a lot of noise. Okay, so some institution may be buying certain positions, and because they're doing this order, okay, the market moves a certain range. Okay, but the real underlying market may be moving in a different trend. But this because of transactional things that they're doing on the trades or the orders, it may take you out on your stops and all that. So yes, there's a component of noise is more in the shorter time frames. That's why if you plot a daily chart and then you look at your 1 minute chart, the 1 minute chart will tend to be a lot of those fuzzy kind of formations, right? Can you trade with 1 minute charts? Yes, you can. You may be a bit busy, right? So I think that may relate to a frequency of trades that you're comfortable with. Okay, some traders are not comfortable with too many trades in a day because it's very, very stressful and a lot of tension. Okay, we should give you a very good example. When I first retired to do day trading and full-time trading, I traded a lot of trades in a day. So I found myself very stressed. Then I say, hey, man, I retired to do trading, not to stress myself out. So I say, hey, I'm going to go to larger time frame, a less stressful way of making money, right? So it depends on you. If you love the intensity and you love that, you can go to the shorter term charts, okay? So each time frame, 1 minute will probably trigger like what, probably 5 to 6 trades in an hour, okay? 5 minutes probably, in 3 hours, give you 1 or 2 trades. So the intensity, of course, goes up as you go down the time frames, right? But yes, you need to handle the noise. That is the problem. Okay, so you may have a lot of fake breakouts and all that will happen in 1 minute charts. I hope that answers the question, Joel.
Yeah, I think it also answered a lot of questions that ask, how many trades should we do in a day?
Yes.
All right. So the next question is by Michelle. How many indicators would you advise us to use to analyze, to spot buying or selling opportunities?
Okay, interesting. Personally, I don't use indicators. Okay, that may be a shock to you. Yeah, you saw ABC. I don't use any indicators. Okay, my system, which I say I trade, is even simpler than ABC. Obviously, probably that definitely doesn't have an indicator, so I don't use indicators. But normally day traders use about 1 to 2. Okay, don't have too many, right? Indicators, because as you complicate your trading analysis, then it slows down your reaction to the market. So normally day traders will probably, if they use indicators, they probably use 1 or 2, right? But you will notice these days that a lot of day traders use what we call market price action, right? So they trade what called naked charts. Okay, they trade structure, market structure, breakout structure, and all that, which is very similar to the ABC. Right, so day traders tend to simplify, and it's a good advice to simplify, right? So if you want to use indicators, I think 2 is more than adequate. Back to you.
All right. So can we combine your ABC strategy with Fibonacci?
That's one of the things that I notice every time you meet a simple trading system. People want to add things into it. You can, of course, you can. Yeah, to recognize a certain important supports and resistance, or perhaps you're looking for say a move, then there's a retest. You want to go in at the correction. Yes, of course, you can use. Right, but you can use it just like that as well if you want to. Right. But don't overcomplicate things, right? It's not meant to be that complicated, right? That's the reason why I say the KISS principle is very important. But if you want to add things, you can, 1 or 2, to try to sort of filter out, okay? Maybe you like to filter out some of the noise, then that's one way you can do it, by adding 1 or 2 more indicators or technical studies. Back to you, Shane. I hope that answers the question.
Thank you so much, David. This question by Azhar is a little bit interesting. Okay. Based on what indicators can the operator manipulate the FCPO price?
Okay, if someone wants to do the expensive exercise of trying to manipulate the FCPO, it's kind of difficult, because why? FCPO is such a globally traded product, okay, and they are big fellas, okay. It probably you have to trade. You want to draw charts in markets to trigger technicals. You can of course use ABC or fractals, okay, but you must have control of that market, okay. But in FCPO, I think it's almost impossible. Okay, you may have some buying power or selling power for if you have big trades. Okay, so for short time frames, you may be able to sort of influence the price, but I don't think it's a market that you can draw your charts yourself anymore. CPO is such a liquid and international contract, international, and it's a global benchmark, so it's impossible to try to use some techniques to manipulate the pharma market. So I think it's impossible. That's my opinion. Yeah.
So it's unlike a small cap stocks. FCPO is very hard.
It's very tough. Yeah, you have to do it in very liquid kind of instruments.
Yeah. The next question is by Elia American. Is it advisable to stick to only one time frame as a day trader, or can we mix and match several time frames?
Okay, that's a good question, and that's a technique that a lot of people use. Right, it can be useful so long as you don't confuse. Okay, so you basically say, okay, higher time frames look at the trend is down, so I look for sell signals in the shorter time frame. Okay, so that's the principle that people think. Okay, but as well, the same thing, you are unnecessarily burdening yourself with more decisions. Okay, so if the decision is not difficult, so you say, okay, you don't look at, say, I look at weekly, then go daily, then go to 4H, then go to 1H, then I trade 50. You have too many layers of decisions to make, okay, and that's going to confuse you, right? So daily making up wave, hourly doing down wave, then trade the particular time frame. Of course, concentrate on trading the particular time frame is the best. Okay, don't necessarily have to confuse with different time frames. It may or may not help. Okay, and the problem is sometimes you get so So focus on the higher time frames that you forget that you're trading day trade. Okay, so you're trading a day chart, thinking of the day chart, okay, which is a position trade kind of trend, and then you're trading your 5-minute chart. So it may be totally irrelevant because it's that one is such a big wave, and you're basically trading the smaller cycles. And by the end of the day, you have to get out of the market. Okay, so be careful when you're using multiple time frames, not to confuse yourself. Okay, because they may have different trends within the trend. Okay, so the 5-minute trend is within the hourly, and likewise the hourly between the daily and daily within the weekly, right? So you can move different different trends within smaller time frames. Okay, I hope that answers the question.
All right, thank you so much, David. Time is running out. Let's do one last question. So David, would you recommend that within one market session that it is easier and better for us to go one direction? Either we go long or we go short, or I feel that it is okay for us to long and short. So that's a question by Tan Long. Okay, Tan Long, thanks for that good question. Okay, depends on your time frame you're trading. Okay, let's say for example you're trading, just now you saw we are putting a 10-minute chart on the FCPO, right? So a 10-minute chart on FCPO, probably on a good trading trendy day, will probably give you only one signal, okay, or multiple signals in the same direction, right? So the CPO tends to be like that, unless you have a day that it gives you a signal, then sharply corrects. Okay, so I think in 10-minute or 15-minute charts, you're likely to probably get two signals. Okay, if you want to trade those two signals on the opposite side, okay, that's probably the maximum you get, right? But most of the times you probably only get one direction signals, but multiple signals, multiple triggers on the same direction. So whether it's good to just keep to one, well, depend on your system. So if the system say buy, you buy. If the system says sell, you sell, right? And if you have to gauge, let's say for example, now it's 5:30, right? And there's a 15-minute trigger, then you don't have time to for that trend to develop. So you may not want to take that trigger. Okay, you also for the day trading must remember how much time have you left from your signal to the market close, right? It needs to have enough time. So if it triggers, say 5 o'clock for a 5-minute chart or a 15-minute chart, maybe 15 minutes, that's the maximum. You have 1 hour for the trade to develop, right? So this is very important consideration as well. So not necessary, but you will find that a lot of times if you trade the ABC signal, that you tend to have one signal or multiple signals in the same direction. So you probably be ending up trading one direction anyway for the day, right? Normally you don't see so many, one trigger up and the next trigger down, right? So yeah, you probably tend to trade one direction, but don't be stuck that it has to be that way, right? It can be if your system tells you that it's time to sell and you have enough time for that day to do a second signal, then you can go in. That would be my recommendation. All right, thank you so much, David, for sharing with us about how do we day trade the futures market like a professional. And thank you so much to Eric Lim for sharing with us about RHB offering as well as the Derivative Virtual Trading Challenge. So if you are keen interest to sign up for the Derivative Virtual Trading Challenge, you can head over to Bursa Malaysia website to register yourself and familiarize yourself with the derivative trading simulator and get ready for the trading challenge that will begin on the 1st August. All right, so this is a risk-free environment for you to practice your future trading skills and be in the running of winning some amazing cash prizes for you. Okay, we the champion will get about 10,000 ringgit cash prize. All right, so let me tell you about our next webinar. So our next webinar on futures will be capitalize the opportunities in the derivative market with the FCPO trading. So I noticed that some of you here were asking, what are some other trading courses for you? So this is the next one that we have arranged for you for futures trading. So it's happening on next Tuesday, 13th of June, 2023, 8:30 to 10 p.m. You may register at the link below. So remember, if you sign up for the DVTC, you may indicate RHB as a preferred broker. All right, so with that, thanks everybody, and hope you all have a pleasant rest of the day. So see you guys in our next webinar. Thanks, David. Thanks, Eric.
Thank you. Bye-bye. Good trading.
Bye.